Hi, I'm Jarrett Lau, the founder of Profitable Properties Boston. As a real estate investor myself, I started from the ground up. I bought a little condo and I didn't know what it meant to actually take advantage of the tax benefits. Now, we all live in America, and America is a wonderful place and it allows opportunities. Now, the government also specializes and helps create laws that actually benefit a lot of owners. This is why a lot of people become millionaires or billionaires because of real estate alone. So I said, all right, well, they're doing something right. What do I have to learn to be able to take advantage of all these things? And in today's message, I'm going to be covering some of the basics of that and the things that I learned that I want to pass on to you so that you can benefit as well. First, depreciation. So typically a property is depreciated. Unlike a car where you drive it off a lot and the value of it goes down, the government allows you to actually write off the depreciation over 27 and a half years for most residential properties. That means that if you have a $100,000 property over the course of 27 and a half years, you get to write off 3.63%. All right, basic math here, right? If it's $100,000 and the actual property, it's not the land. So if you own a single family house, it's just the building itself. So you'll have to take that into consideration. But let's just say that the value of it's $100,000, you get to write off $3,600 a year, which is a fantastic thing. Now, what happens with that depreciation is that it's going to be written off of your income. Now, your income for your rent on that property, let's just give it $2,000, might be $24,000 a year. What that means is that if you had $24,000 of income, you're going to be able to write off all these other benefits of deductions. And this is very different than a single family homeowner where you might not be able to write off your condo fees, might not be able to write off your repairs. Every single dollar that you spend when you're an investment property owner is actually taken off of that $24,000, which is actually really nice because if you have $24,000 and you get taxed on that, obviously depending upon your tax bracket, it's going to be a significant amount. Whereas if you're able to lower it, you might only at the end of the year, after all your expenses, only get taxed on $5,000 or $10,000. But there's so many other benefits other than just these deductions and write-offs. So depreciation is one of them. Of course, appreciation of the property itself. Appreciation is when the property value goes up, but you can never guarantee that. So we're just gonna focus again on this message about things that we can count on. And one of them is equity buildup. So if you have a mortgage, every single month you're paying both principal and interest. And that principal pay down of your mortgage allows you to actually pay off your loan slowly but surely over a set length of time. Every single month, that is actually money that's in your pocket that when you pay that principal down. So that's really nice. After 5-6 years, a lot of my investors will take that equity out as well as that appreciation and buy another property, and that's really leveraging. So we've covered both depreciation, we've covered appreciation and equity, and lastly, we're going to be talking about another benefit of owning investment property. And owning investment property is obviously something that you're going to get rents in. And rents in just means that you're going to have a net amount. Now this video, if you're underwater with your mortgage and let's just say it's a $4,000 mortgage with everything and your rental are only $2,000, this video might not make sense for you. We're really talking about the ones that make money. So we're going to be able to have that cash in pocket in hand. So these are all different aspects that when you're considering whether do I keep a property and make it an investment or do I buy an investment property, what do I actually make financially from this? You can't always just look at it in the sense of what your net amount is at the end of the month. You're going to want to look into how the taxes and the depreciation and deductions factor into your income, how the equity buildup will factor in of the build out, as well as of course the appreciation that may occur. So again, Profitable Properties Boston is, our goal is to be able to help you, our buyers, become more profitable. I had to personally switch my CPA because my previous CPAs were not specialized in investment properties. Now the people that we're working with and that you now have a resource to are specialized in helping investors make money, keep money, and to be able to help you out with it. So if you or anyone else you know is looking for a profitable property and a property manager that is actually able to help guide you and advise you on some of the tax and financial aspects of owning an investment property, feel free to reach out. Because at Profitable Properties Boston, we want to help you go from one property to wealthy.